What's up everybody, GenExDividendInvestor here. I have some really exciting news to share in this video, so stay tuned, and if you're new to my channel then welcome. My goal is to inspire, educate, and entertain you as I share the investing lessons I've learned from being in the markets for over 25 years. My favorite strategy is dividend growth investing, and now I'm finally realizing my dream of living off my dividends to pay my bills. So if that interests you, then please consider hitting the thumbs up button, subscribing if you haven't yet, and click that bell notification. I'm doing this video because I've gotten a bunch of new subscribers to my channel who asked me if I could do a summary video where I cover a bunch of things, like can I review my $1.7 million US dividend portfolio, talk about how I'm transitioning to using dividends to live off of, can I share what my background is and how I made my money, can I explain how I'd recommend that others can do the same, speaking as someone who's actually done it and is doing it, and some other useful information such as how I plan to avoid paying the early IRA withdrawal penalty, yet still take dividends out of my retirement accounts, even though I'm in my 40s still. Then I'll end this video with an inspirational story that I think you'll enjoy, so I recommend watching this entire video. Okay, first let's review my portfolio. So this is a spreadsheet I track my dividends in that is sorted from my largest position to my smallest. For example, Apple Computer is my largest position, and I have 1,379 shares of it, and yesterday it closed at $118.69 a share, which means it was down 13 cents on the day, which is minus 0.11% down on the day, which is also why it's highlighted in red rather than green like some others. That means my Apple position closed down $226.07 for the day, and my total Apple position is worth $206,401.91, which is 12.02% of my overall portfolio value, which you can see on the bottom row, which is the sum of the previous rows, and is at $1,716,565. With its low yield, Apple is creating $1,425.98 of dividends a year in my portfolio. And then if you add up all the dividends for each of the stocks in my portfolio, you can see that in total I'm getting $51,637 a year. Now I'll quickly go over each approximate position in case you aren't feeling like you want to screenshot this and look over the details. After Apple, I have about $176,000 worth of Microsoft, then $124,000 of J&J, then $110,000 of Procter Gamble. My fifth largest position is Pepsi at $106,000 worth. Then Duke at just over $100,000, and you can see that Duke is yielding $4,160 of passive income a year. Then I have $89,000 of 3M, then $89,000 of McDonald's. My ninth largest position is $82,000 worth of Coca-Cola, and rounding out the top 10 is Kimberly Clarke with $76,000 worth of shares. Then I have Realty Income at $82,000, followed by Southern Company at $67,000, and then I have AT&T at around $66,000, but it's throwing out $5,054 a year of dividends due to its nice yield. Then Colgate Palmolive at about $55,000 worth, and the number 15th largest position in my portfolio is AbbVie with $46,000 worth of shares. Then Leggett Platt at about $39,000. Then I have about $33,000 worth of Caterpillar. Then ExxonMobil at $29,000 worth. Then my 19th largest position by portfolio size is StarBucks with $28,000 worth of shares. And rounding out the top 20 is Home Depot with $27,000 of shares. Then Goldman Sachs is $23,000 worth. Then Travelers is about $20,000. Then Pfizer at $17K, followed by Disney, which I should probably remove from my dividend portfolio since they suspended their dividend, but since they didn't make a decision yet, I've kept it in here and I have about $15,000 worth. And finally, my 25th and smallest position in my dividend portfolio is about $13,000 worth of Chevron, which drips about $952 a year. Here you can see the current dividend yield for each stock in my portfolio. So you can see that Apple is at a 0.69% yield, which is a very low yield and which changes daily as the stock price changes. And on the bottom row, you can see that the portfolio's average weighted dividend yield is 3.01%. I highlight some cells here in green based on various things. So in the dividend yield column, I highlight the yield if it's greater than or equal to 4%, which is just an amount that I like to call attention to for my own planning purposes. I also am showing each stock's 3-year dividend compound annual growth rate, or CAGR, which represents the historical percentage amount the dividend was increased each year on average. So Apple has a great one at 9.83%, and then at the bottom we see that the portfolio's average weighted CAGR is 7.51%. That's basically like saying the portfolio is estimated to grow 7.51% every year, even without me adding any money to it, simply due to how much companies raise their dividend each year. Ask yourself if you get a free 7.5% raise each year at your job. I know I hardly did. And in this case, your job is to do nothing, as it's all passive income. Also in my spreadsheet, which is completely automated, I have these two rows which estimate how much my annual income will grow over time with the drips off, which is the top row, versus on, which is the bottom row. Or to say that another way, the top row estimates how much dividends I will get per year if I'm not reinvesting the dividends using the portfolio's average weighted CAGR to estimate growth each year. And the bottom row estimates how much dividends I will have per year using the portfolio's average weighted CAGR combined with the fact that I'm buying shares each year, and thus it will grow even faster. So you see in the current year where I am today, my portfolio is making $51,637 a year, and then 1 year from now I should be making $55,514.60 just from increases to dividends companies are estimated to do. Or I'd be making $57,178 from both increases to dividends paid out combined with the assumption that I'm reinvesting those dividends to buy more shares. So if those dividend growth rates continue, then by year 10 I could be making $106,507 a year from not adding any more to the portfolio, but merely from the companies increasing their dividend year over year. Or $150,120 a year in year 10 if I've been reinvesting the dividends throughout the years. I also have some graphs which are created automatically that I find useful. Here's one which breaks down the sectors my portfolio covers. So technology stocks are 22.3% of my portfolio, healthcare stocks are 10.9% of my portfolio, consumer defensive is about 25% of my portfolio, etc. I have a bunch of other graphs and information in my spreadsheet, but I just want to show you the quick highlights. This info I'm calling my 1.0 spreadsheet, and I'll be doing a video shortly about my 2.0 spreadsheet which has a ton more useful information in it, so stay tuned for that. Okay, now how am I transitioning into using dividends to live off of? Well, I turned off the drips in my brokerage. A DRIP is an acronym that stands for Dividend Reinvestment Program, which is just a toggle you can configure in your brokerage, which indicates if you want to reinvest your dividends to buy more shares or if you don't. So now cash just shows up in my brokerage accounts either on a quarterly basis or monthly basis, depending on how frequently each company pays out, and then I just transfer that money from my brokerage account into my checking account to pay bills. I can literally be on a beach somewhere and just use my smartphone to move cash into my bank account from my brokerage, and that cash just keeps showing up without me working for it. I just turned off my drips a few weeks ago after having them on for decades, so it's been super neat for me to see cash accumulating in my brokerages rather than buying more shares. So by 2021, all incoming dividends will be cash for me, and my plan is that dividends will be covering our housing costs and healthcare costs, and then my wife and I's online businesses like my social media stuff and her e-commerce business will be paying for our other costs like utilities and food and Christmas presents and whatever. Historically, we both had normal jobs. Mine was in tech, and my wife is a 9-to-5er who clocks in at a job. Then we both began online gigs that started slow but have been growing. We currently are making low 5 figures online, and my first big online income goal is to get to 6 figures as my wife transitions away from her 9-to-5 job. For me, my online income comes from my social media platforms, many of which are synergistic, like my YouTube channel, my Instagram, my Twitter, my Dividend Discord chat server, which is growing very nicely and is super fun to be part of on a daily basis. My Patreon, which grants special perks and insights on my Discord, and lets you get some behind-the-scenes look at my YouTube videos, as well as lets you influence what I release. And I get income from referral fees and Amazon affiliates. Speaking of referrals, if you're interested to start investing, then consider using my M1 brokerage referral link in the description of this video. M1 normally runs promotions where if you click a referral link and then open a new normal brokerage account and transfer some cash into it, then we can both get free cash given to us. By normal account, I mean a non-retirement account. Historically, I've seen $10 and $20 referrals, so I'm not sure when you're watching this video exactly what M1 is potentially offering. Also, if you'd like to more directly support me in my journey to spread the positive message about dividend investing, then please consider clicking on the Amazon affiliate link in the description of this video, and then go shopping online. As an Amazon associate, I earn from qualifying purchases. Okay, my dividend portfolio you saw is currently 6% in tax-sheltered accounts like IRAs and 40% in a taxable account, and combined generates about $51,000 a year in dividend income. Now normally if you try to do a withdrawal from a retirement plan like a traditional IRA before you are 59.5 years old, then dividend distributions will be subject to income tax, and then to an additional 10% penalty tax since you're withdrawing before you're at federal retirement age. However, there are exceptions which you can use to avoid paying that additional 10% early withdrawal penalty tax, and I plan to use 2 of them. The first is that if you use your withdrawal to pay for medical expenses, and your unreimbursed medical expenses for people under the age of 65 are greater than 10% of your adjusted gross income, then you don't pay that penalty. Or to say that differently, I plan to use the cash my dividends drip in my retirement accounts to pay for my healthcare expenses like my monthly premiums and doctor's visit deductibles and stuff like that, which should allow me to avoid having to pay the penalties even though I'm withdrawing dividend cash from an IRA. I eventually also plan to use my IRA dividends to fund my kids' college expenses once they're old enough, because you're also allowed to do that and avoid the penalty. So that's how I'm planning on using my dividends in my retirement accounts before I'm quote-unquote retired and not get penalized for taking money out of them. This way I've been able to enjoy decades of tax-free compounding in my retirement accounts, and now I have a strategy to use those retirement dividends while in my 40s without getting penalized for early distributions, as well as have a strategy for years down the road when my kids are in college. Now, definitely don't take any of that as financial advice, but that's my plan for 2021 and beyond, so I'll tell you if how I understand things and have organized things works out as planned. If not, then I'll adjust. Now for some exciting news that I've not shared yet on YouTube. Soon I plan to drive my dividend income up to over $75,000 a year by selling something other than my dividend stocks and then driving that money into my dividend portfolio. If I do that, then I'll show you my dividend portfolio in E-Trade before the huge set of buys, and then I'll record a video of me doing the actual buys of multiple hundreds of thousands of dollars of more dividend stocks, including adding a net new dividend stock I've been eyeing on into my dividend portfolio. I'll also explain details of how I got that large chunk of cash to invest, as well as how I believe you can replicate that process in your life. If it works out as I hope, then I think you'll really enjoy watching it and learning how I did it. I don't have an ETN when I plan to do that video, as I have a bunch of moving parts to work out, but hopefully it'll happen. Okay, so what is my background and how do I make my money? So I live on the West Coast, but no, not California. I don't like to get specific about where I live to minimize the likelihood of nefarious folks identifying me. I've already had a bunch of scammers trying to reach out to me. If you watch my channel, you know that while I keep some specific details about who I am private, I go open kimono sharing other things about me. For example, watch my video called The Time I Sold All My Stocks to hear some intimate health issues about myself in a video where multiple people have told me actually made them cry. As another example, I shared a story of a real estate deal that I did with a relative who ended up not following through with a verbal agreement we made, which caused me to lose the 6 figures in cash I put in. I ultimately decided to forgive and forget in order to keep the overall family relationship strong, rather than fighting for the money. So I might not bare my face, but I do bare my soul and share financial and personal relationship issues to a level that I wouldn't otherwise do if my actual identity was known. My channel has been a bit cathartic as it allows me to unload my thoughts and feelings in a freeing manner as I hide behind an ironic cloak of anonymity over the internet. I was raised not to talk about money or finances. My relatives and even my friends don't know that I'm a self-made multimillionaire, and I like to keep it that way. So how did I make my money? Well, if you want a longer version, then you can watch my popular video called How to Become a Millionaire. The TLDR is this. At a young age, I fell in love with computer games, which then got me interested in programming so I could make my own games. I ended up graduating from Carnegie Mellon University in the 90s with a math and computer science degree. My first job out of college was as a programmer. My salary was pretty crappy. I started about $30,000 a year, which is only like $50K in today's dollars. So it was okay, but no big deal. Probably because I didn't go work at a hot tech company in Silicon Valley. As the years went on, I put some energy into moving up in my career and transitioned from programming into management. My foray into investing started at age 21 because of a cool coworker at my first job who suggested I start a 401k. I had no idea what a 401k was, and in those days HR didn't push to tell you about them. But he was cool, so I listened. At that time, I wasted most of my money on cars, dates, gaming, and travel. Actually, I don't see travel as wasting money. I feel fortunate that I've been able to travel to all the continents multiple times, other than Antarctica. But managing my money and growing my wealth wasn't a main focus of mine. Having fun was. I was always reasonably financial prudent. Like I never had a credit card charge, as I always paid off my statement in full, but I wasn't frugal like my dad always was. My point? I've done okay basically by not being too stupid, but not because I was hyper-focused on becoming wealthy. I just have consistently invested for decades, and I had a career I could grow in. So if you are watching this and you're in your 20s and you're already focused on growing your wealth and you're living frugally, then I'm very confident you will most likely end up doing very well for yourself. Now, beyond that guy who told me about 401ks were a bunch of older coworker programmers I frequently went to lunch with that were always talking about investing in the stock market, so that piqued my curiosity to invest beyond my 401k. I got more and more into stock investing. In the late 90s, I started a stock investment club with some friends, which we formalized as an LLC with contractual expectations. We would all research stocks on our own and then bring them to the table and discuss what we wanted to collectively invest in. We had a minimum amount we each had to invest on a recurring basis, and we each held a % ownership in the overall assets of the company based on what we contributed. I've personally always preferred single stock investing, even though I think that for the majority of people out there it's smarter to go with inexpensive broad market ETFs. I usually opt to lump sum invest rather than dollar cost average in when I had chunks of cash, though I agree that psychologically it feels safer to dollar cost average slowly over time. One of the ironies in life is that the riskiest thing you can do is take no risk. What I mean is I know a lot of people that don't invest in the markets because they can't stomach the thought of putting their hard-earned cash into something which can go down. That reminds me of something I saw online which said there are only 6 ways to get rich. Number 1 is marry money, which I didn't do. Just the opposite, I inherited my wife's debt. Number 2, inherit money, which I've never gotten. Again, just the opposite. I've given my relatives serious cash over the years. Number 3, exploit a unique talent, which I don't really have. Number 4, get exceedingly lucky, which has happened on occasion, like when I met my wife, but I've also been exceedingly unlucky, so I'll just say I have below average luck. Number 5, own or lead a successful business, which I don't have, though I feel I might be at the beginning of a good business with my social media stuff. And finally, number 6, spend less than you make and invest your savings wisely over long periods of time, which is what I've done. And it's not sexy, but it works. Trust me, if I can do it, you can do it. Now, beyond focusing on growth in my career and investing on my own, I also found that the home you live in was another great way to grow my wealth. I would find a house that I liked at a good price, and then I'd plan to live in it for at least 5 years in order to get the best tax benefits, and then I'd sell if I could make a handsome profit, and I'd repeat that cycle. Multiple times in my life I've done that, and then would take that chunk of profit I made from simple house appreciation, and then invest into stocks or real estate or whatever. Over the years I've gotten experience with a variety of real estate investments, including single-family homes, apartments, commercial real estate, all of which helped me learn a ton about the amazing real estate benefits like 1031 exchanges, triple net leases, depreciation, and various interesting tax deduction strategies. But I've never found investing in physical real estate as truly passive or stress-free like dividend investing is. I found it irksome to deal with tenants, maintenance, less liquidity, etc. Real estate can be an incredible way to grow your wealth, and I recommend everyone should explore it, but I way prefer dividend investing, even when you have property managers doing a lot of the work for you. Now, I hold both a dividend portfolio and a growth portfolio, and in fact my growth portfolio is up 6% year to date, doing better than my dividend portfolio, but I still prefer dividend investing. I've also got a crypto portfolio I started when Bitcoin dipped to around 6K, and that's around when I also went long on Ethereum. Though I see crypto as super risky and speculative, so I'd personally recommend a small portion of your overall portfolio in them, assuming you can buy at compelling prices. I'm up over 100% year to date in crypto, so it's definitely a wild ride. Now, I don't go over my non-dividend portfolios on my channel, as it's not my brand or my passion, and my long-term plan is to sell out of my non-dividend positions over time and transition that money into my dividend portfolio. I did do a video called When to Sell a Stock if you want to hear reasons why I tend to sell out of a position, if you're so intrigued. I have instructions in my estate planning so that my non-dividend stocks will be converted into dividend stocks if I'm no longer around, which should make the financial planning easier on my wife and kids. That being said, if you watch my videos, I sometimes share growth positions I hold, such as Tesla and Google and Amazon, amongst others. I also sometimes mention my growth positions in my higher tier private Patreon channels on Discord. So why did I start a YouTube channel? Well, primarily because I wanted to teach my kids, when they're older, about how their dad invests in a way that they've loved, which is watching YouTube videos. But now this channel has grown into a passion of mine that I didn't realize I'd have. It takes far more time than I anticipated, but I truly love it. Okay, so what do I do now for work? I spend some of my time helping out a tech startup for equity, which means I have a percentage ownership in it, but they don't give me a salary. So it's one of those plays that likely goes nowhere, but could end up rewarding me nicely down the line if they're successful. I'm what you call an accredited investor, though in this case I'm just investing my time and not actual money into them. I have invested money into other startups in the past that went nowhere, unfortunately. Trust me, it really sucks to invest 50 grand into something and see it worth zero in a few years. Beyond that startup, I spent a lot of my time building my YouTube channel and other social media platforms. Every so often someone reaches out to me about potentially working at a normal tech job again, but so far nothing has sounded compelling enough for me to do it, and I'm liking the path I'm on. One question someone asked me was, how do I plan to get healthcare if neither my wife nor I have jobs through employers? Well, the Affordable Care Act has health exchanges which let you get health insurance, even if you have pre-existing conditions like I do. So I can choose from a variety of plans that fit my financial needs and health risk tolerances and coverage desires and such. So it's nice not to be shackled to an employer to get healthcare even with a pre-existing health condition. I've already signed up for the plan and I'll officially be on it in a few weeks. Another question I've gotten is how much cash have I put in my portfolios? Unfortunately, I don't know anymore. You see, I got into almost all of my stocks in the 1990s and then I kept buying as time went on. The only new stocks I added relatively recently were Apple and AT&T. What happened was that I sold out of all my stocks in 2018 after having held them for over 2 decades, only to turn around and buy back into them shortly after I sold out, which seems stupid but makes sense if you watch that video I did called The Time I Sold All My Stocks. So while my current spreadsheet shows that I have over 200% returns for Apple and only around 40% returns for Microsoft, when I look at Microsoft I know my actual gains are over 500%, with my first tranche being up 1000% or something insane. That's why I count Microsoft as my best performing stock, not Apple. I unfortunately lost all that historical spreadsheet stock data about buys and such due to a laptop crash, as well as due to me switching brokers multiple times over the decades and them unfortunately losing my data that I didn't discover until years later when it was too late, which means I had to pay taxes like a cost basis of 0. These days most people just do stuff in the cloud, but unfortunately I didn't back up my stock spreadsheet I'd built up over time. Anyways, make sure you check everything if you ever switch brokers, and realize that some brokers only keep your data for about 7 years or so, and of course back up your data more. Okay, next question. How would I recommend others can build a dividend portfolio and eventually live off of it? I actually did a video called How to Start a Dividend Portfolio in 2020 that I think is useful to watch. If you're an absolute beginner to investing, then I recommend you first watch my video called How to Invest in Stocks for Beginners. So what's the TLDR for how someone can build a dividend portfolio like mine? Well, it starts with consistently investing in decent stuff for decades, even when others quit or get scared. If you have a company 401k, then use it. Live frugally, don't take on bad debt, don't get too big of a house, drive a safe but inexpensive car. Keep investing all that you can afford to lose. The easiest way to invest is probably with inexpensive broad market ETFs like VU, but if you want to do single stocks and are willing to put in more time and energy into researching, then single stocks can be a viable option too. If you want to invest in higher risk, higher return stuff, some of that can be good too, but I think also investing just in solid good stuff is a steady Eddie way you can slowly become wealthy. Focus on growing your income in your career. Consider building equity and income with real estate. And then hold your good stocks. I'd also recommend you start a digital side hustle. 5 years from now, you'll be probably glad you did. Another question I'm often asked is, where do I think the market will go from here? Well, I think the market's overheated. Here we see the last 30 years of market PEs. You could argue we should be around a 15, up to maybe a 20 if you push it. Right now we're at a 35. What do you think, a bit rich? That being said, I don't plan to sell everything, as I know I can't consistently time the market, but I'm also mentally and financially able to deal with the market crumbling. I have no idea what will happen in the short or medium term, but I am confident that over the long run, as in multiple decades, the US equities market will continue to trend up. Whether that means we go sideways for the next 10 years or do an 80% drop tomorrow or we shoot up to the moon, I have no idea. Nor do I believe that it even tends to matter over the long run if you're a true buy and hold investor, which so many people say they are, yet they prove time and time again they're not. All I know is we have crazy volatility right now and the VIX is very high. Watch my fun Halloween video I did called VIX, How to Measure Fear in the Stock Market, if you want to learn all about the VIX and stock market volatility. Market volatility is part of the reason why I like dividend investing so much. My income tends to keep trending up regardless of what the stock market is doing. When I look over my entire portfolio, I've only had a hiccup with Disney with the dividend suspension, but many other stocks in my portfolio have done dividend increases. I keep thinking I'll see my oil dividends cut or suspended, but so far that hasn't happened. By the way, I just did a neat video on the top 5 oil dividend stocks you should consider checking out. Bottom line, I'm fine dealing with volatility. I went through the dot-com crash in 2001 and saw my portfolio value fall over 50% from its peak, and it was a gut punch that emotionally shook me. I had multiple friends who quit investing and never got back in. I also went through the 2008 banking crash and again saw my portfolio fall significantly from its peak, but I kept moving forward. The people who try to time the market never seem to do well in the long run. They get lucky once or twice, but over time they lose out. It's probably why Lynch once said, "Far more money has been lost by investors preparing for corrections or trying to anticipate corrections than has been lost in corrections themselves." I'm usually the guy who feels the market is too hot, but just keeps investing. So if I were a betting man, I'd bet we have a significant correction coming up. But regardless, I stay true to my simple buy and hold investing strategy, as I believe in that more than I believe in my ability to time the market. So where do I plan to take things? Well, beyond building my social media platforms, my current plan is to wait a couple years until the kids are further along in their education, and then move somewhere crazy like Costa Rica or Thailand or Europe, though I'm planning to keep making videos and growing my Discord, as they're both a blast. Now I want to end this video with an inspirational story I found online that I think you'll like. There was a blind girl who hated herself purely for the fact she was blind. The only person she didn't hate was her loving boyfriend, as he was always there for her. She said that if she could only see the world, she would marry him. One day someone donated a pair of eyes to her. Now she could see everything, including her boyfriend. Her boyfriend asked her, "Now that you see the world, will you marry me?" The girl was shocked when she saw her boyfriend was blind too, and refused to marry him. Her boyfriend walked away in tears and later wrote her a letter saying, "Just take care of my eyes, dear." Moral of the story? When our circumstances change, so does our mind. Some people may not be able to see the way things were before and might not be able to appreciate them. When I first heard the story, I had chills run up my spine. There's a lot you can learn from it. Grab a coffee, find a quiet corner, and reflect on it. Okay, now I'd like to call out some recent new Patreons who signed up. First, I want to thank my higher tier Patreon aristocrats. So thank yous go out to Tyler Dripsky, Christina RN, Dividend, and last but certainly not least, Khaleesi K. Finally, I'd like to thank SH4132 for signing up as a Patreon champion. Thanks guys and girls, I really appreciate your support. And thank you, the viewer, for watching all the way to the end. Leave me a comment if you did, I'd really appreciate it. These videos take a lot of time and energy for me to create, so please consider hitting the thumbs up button, subscribing if you haven't yet, and click that bell notification. And please join my Dividend Discord server and come chat with me and thousands of other investors. Thanks, and I'll talk to you again real soon. I am not a financial advisor, and these videos are for entertainment, inspiration, and educational purposes only. Investing of any kind involves risk. I am only sharing my opinion with no guarantee of gains or losses on investments.